So we're at roughly the halfway point of 2023. How has the global economy fared so far? And what are the prospects for the rest of the year? Well, I think the best way to approach this is to highlight both the positives as well as the negatives. And there are plenty of both. On the positive side, we have seen consumer price inflation come down almost everywhere. Central banks have therefore started to cut interest rates, which has led to a rally in asset prices. For example, global stocks are up over 10% year to date. Emerging markets are even doing better with an almost 20% gain, and high-yield bonds are up over 15%. This has also helped to boost the value of people's portfolios as well as their net worth, and this in turn has improved consumer confidence. In fact, the University of Michigan's Consumer Sentiment Index is now at its highest level since 2021. In addition, the global economy has proven to be more resilient than many had expected, including myself. Global growth is expected to come in at around 3% this year, which is not bad considering the massive shock of higher interest rates as well as the war in Ukraine. That said, there are three developments that could derail the global economy in the second half of the year. And let's start with the most obvious one, which is the banking crisis. Of course, things have calmed down since the collapse of Silicon Valley Bank and Credit Suisse, but the fact remains that monetary policy is still very tight, and with inflation still sticky, there is a risk that more banks could get caught in the crossfire. Just ask the shareholders of First Republic Bank, as well as the depositors who had accounts larger than the Fed-check insurance. The second risk is the ongoing war in Ukraine, which continues to disrupt energy and food supplies, not to mention the fact that it is a humanitarian disaster. The longer this war drags on, the higher the risk that it would derail the global economy. In fact, just this week, we saw how the world's largest oil producer, Saudi Arabia, cut its oil price to Asia in an effort to defend market share. This comes at a time when demand is already starting to weaken, and this is not a good combination. The third risk is actually the biggest risk in my opinion, and it is the escalation of the US-China tech war. If the US government gets its way, China will be cut off from the most advanced chips and the equipment used to make those chips. This would be a massive blow to China and could easily lead to retaliation. The problem with this is that China's economy is much more integrated into the global economy than the US economy. A slowdown in China will have much more severe consequences for the rest of the world. And that is why I think there is a good chance that this trade war will remain one of the key risks for the global economy in the second half of the year. Of course, these are not the only risks out there. There are many others, such as the water crisis in the US and around the world, as well as the debt crisis in emerging markets. But in my opinion, these are the three biggest risks that we need to watch out for. As always, stay humble and keep learning.